It's about that time of day again. My name is Joseph. It's Wednesday evening, May the 3rd, 2017. Welcome back to your nightly newsletter. We're covering crude oil, S&P, gold, euro, and FDAX tonight. Crude is bearish, but the recent move off the highs went a little too far too fast for us to want to sell all the way down here. So we're waiting for a move back into the battle zone for another shot at selling this market tomorrow. The S&P is bullish and setting up in a perfect location at the low of a spiking channel, even got a two-legged correction off the highs. All the buyers need is the proper signal candle for a retest of today's high and a possible measured move tomorrow. Gold is bearish, a strong run lower today. Yeah, strong is kind of an understatement on gold, but we're sitting at a major support level tonight, which means our plan is to avoid chasing this move lower and look for more reliable trading opportunities up at higher prices tomorrow. Euro appears to be bearish at first glance, but looking closer, we can see the sellers are trying twice to break out of a range from earlier today. So we're looking to fade this move going back into the range tomorrow. The DAX is bullish, but the chart tells us we're two legs up, which isn't a very good place to buy, so I'm waiting for a correction back into the battle zone before we look to buy more tomorrow. What a great day today. Boy, what a great hump day. Wednesday session had some big news here today, some big moves on the chart. You know, with me, I got a great newsletter in store for you guys and gals tonight. Lots of tradable opportunities setting up for tomorrow's session. Before we jump into our charts, though, I do want to remind you the only place to watch the full-length version of this video is here on our blog at sidewaysmarkets.com. If you're watching the video right now on our YouTube channel, it's only a small snippet on the YouTube channel, right? Dig into that description. In the description of that YouTube video, there's a link. Follow that link and come join me on the blog at Sideways Markets, right, for all 5 markets and all the analysis. While you're here, don't forget, join the mailing list. I'll send you an email every evening when our nightly newsletter goes live. Follow me on social media. Right below the video tonight, lower left-hand corner, follow me on my many different channels. I'm always posting important charts, links, and updates throughout the day. Don't forget to grab those charts. How easy is that? All the charts in tonight's video, have them ready on your computer tomorrow, right where it says click here to download today's charts. Follow that link below tonight's video. And then please don't forget to grab your free pass. If you're not an advanced member here at School of Trade, grab that free pass in the upper right-hand corner, right? You'll spend 90 minutes with me. You'll learn more with me on 90 minutes, right, than you will anywhere else on the interwebs. I can guarantee you that. Grab that free pass. And please don't forget, if you have any questions on the way, I'm always here standing by to help you guys out 24/7. So holler at me. Use that live support tool on the right-hand side of the website. Boy, oh boy, what a busy day. I apologize. I'm a little late here to the video tonight. It was a Fed day. It was an inventory day. It was a busy one here in this office. What a great day, though. What a great day. It's been a great week here so far. It's been a great month. Hope you guys are doing well out there as well. We're only as good as our next trade, though. Let's get ready here for tomorrow. Tomorrow's Thursday, May the 4th. Starting out tonight here, we have some general services PMI from our good friends in China at 9:45 p.m. If you're trading the overnight Asian session, be aware of that. Other than that, though, tomorrow we've got a kind of peppering here, 2:50, 3:50, 4:30 a.m., kind of a peppering of news during the kind of the middle of that London session. You know, like I said earlier on this week, I think all eyes are really focused on that election in France on Sunday. So I'm not sure how much you're going to see these news events really move things around. But keep an eye on those tomorrow morning, 2:50, 3:50, and 4:30 a.m. as we go into the U.S. session. We'll, of course, be trading in our trade room tomorrow morning as of 8 o'clock Eastern Time. We have the 8:30 international trade. And jobless claims are a bit of a yawner at 8:30. Jobless claims, not going to worry too much about jobless claims, but international trade, right, productivity and costs, those will all be lumped in there. So we should see that move the needle tomorrow morning at 8:30 a.m. Eastern Time. Other than that, tomorrow we got some factory orders here at 10 a.m. You know, it's kind of a minor news report. I'm not worried about that too much. The one thing that does stand out for tomorrow, again, kind of minor news in the morning, 8:30 major news. If you're with me tomorrow morning in the trade room, the one thing I do want to remind you about tomorrow is tomorrow's the Thursday ahead of the employment number on Friday. What does that mean? That means end of the day tomorrow. Be very careful. At the end of the day on Thursday, a lot of the fund managers, right, the big lot traders out there who can't be caught on the wrong side of the market on Friday morning, they're going to start either consolidating positions or not taking new positions as they go into, again, end of the day on Thursday. Professionals won't take the risk of being caught in a big position. I know small lot sizes are easy to get in and get out, but if you're talking about a couple hundred, couple thousand, right, contracts here, right, it's not easy to get out of those positions in a low volume environment that's expected on Friday morning ahead of that news. So what that means to you is watch out tomorrow afternoon, 2:30, 3 o'clock, 4 o'clock, right? Start watching for that volume to dry up pretty consistently here across the board ahead of that employment number on Friday. So heads up tomorrow afternoon. Again, miscellaneous news here tomorrow. Nothing really stands out. I'm sure most of what we're going to see tomorrow will be on the back or in the wake, right, of the FOMC announcement, which was pretty much the same. We saw pretty much the same statement from the Fed today that we did back in March. They've given us a pretty good idea, though. We're probably looking at June for that rate increase. You know, they got a couple targets here for this year. We'll probably say their rate increase June, maybe in September, but they did kind of kick that can down the road. Nothing else really that warranted any real big changes. But we got some big moves on the chart, and of course, with some big moves, we definitely expect some big opportunities tomorrow. Let's jump right in. We got some work to do here tonight, and again, I appreciate you waiting around for me here this evening. It was a busy day, and I did my best to get this done as quickly as possible. Crude is bearish, but this recent push lower sent prices a little too low to sell at this point. So the plan for tomorrow is to look for selling opportunities up in that battle zone using a two-legged correction or a seller failure. Now, if price pushes lower, we want to avoid the no trade zone and focus on using that support trend line as resistance for a measured move target back down tomorrow. Well, I'll tell you, we don't usually have it like this. It's not usually this way, but this market looks like a train wreck. This is what happens when you combine the FOMC announcement with an inventory report here today. This, as you can see, the market here clearly all over the place. Whenever I find myself looking at a chart, and I, usually look at a chart, obviously, if you have some experience with this stuff, you look at a chart and usually you'll see, channel, range, you can usually see these things. They usually pop out at you. This chart really, with the exception of what happened this morning, right? And we, of course, saw this morning with all of our clients in the trade room, bear channel down. That bear channel, the sellers, of course, taking it lower on the inventory report down to that prior day low. That's really where the easy stuff kind of comes to an end, right? Everything else is, is it a flag? Is it a triangle? So it's a little bit confusing, right? This market definitely on the more choppy side after the inventory report came out. And again, it's, you don't get blaming on Yellen and co, right, at the Fed. The bottom line is, whenever I find myself in a situation where I'm going, okay, what is the most actionable information, I start to look at it and think, okay, well, who has control? First of all, back it up. Who has control? We know the bears had control as of 10:30 a.m. The question is, were the bulls ever able to take control back? Look at the chart here right now. Every time price goes above the moving average, what happens? Smack back down. Now, boy, the buyers had a good shot right here, right? They had a great shot right there to hold that pullback. Did they? No. Go back up again. Try to hold the pullback here. No. Buyers keep getting great opportunities and they keep failing. So again, this is a little trick that we use all the time in the trade room. Who has control? If you don't know that, you shouldn't be doing anything, right? In this case, the bears still have control. Now, with that said, we can definitely see they're seeing some higher lows, and that's creating, right, that rising support trend line. But knowing that the bears have control right now, we don't want to be a buyer yet. We want to be a seller. We want to sell high, not sell low, right? So who has control? The bears have control. Where's their objective? Their objective will be to go back down and retest that low. So that's the objective right now for the bears. Now, who has control of the bears? Where's their objective? Back to the low. Third and final question to ask, where are we right now, right? We're sitting at a support trend line, but most importantly, we're after a real strong bear move down, right? We get a good amount of space away from that moving average. A lot of traders would say we're oversold at this point. I don't like that word oversold because I don't have the right to tell that to the market, right? The market will tell me what it wants to do. My job is to interpret and try to be in the same mentality, right? The same sentiment as the market. So the bottom line is the bears have control. Their objective is back to the low, right? And we are oversold, right? In quotations, right? Oversold at this time. Now, whenever I say we're oversold, or whenever I say we're a little bit too low to sell, I don't want to sell low, I want to sell high. Where could I sell high? Well, I could sell high back at the moving average, but that doesn't get me too far away from this trend line, does it? That's not going to be a very reliable place to sell. Where else could I sell? Ooh, how about up in the battle zone? 87. Trend line coming down, right? And of course that 05. So this area up here becomes a great area now to sink our teeth into this. You know, some folks may look at this as a triangle. It's not a triangle because these areas right here are not bouncing. So it's definitely not a triangle. I'm more inclined to call this a flag, right? Because you can see that rotation, right? I'm more inclined to call it a flag than anything else, right? But I don't think I would call it a triangle yet. I would say we have a rising support trend line. I would say we have a falling resistance trend line. It becomes a triangle if we start seeing rotation, right? If we start seeing this market kind of abide by those support and resistance levels. So how do I sell high right now? Good question. Up inside that battle zone. Now that's a big move higher, right? That's a big move higher. Usually whenever you see a big move higher like that, it'll usually look something like this. Either a two-legged move, which we'll see a great example of this on the S&P in just a moment, right? Two-legged move back into that battle zone. Somewhere up in that battle zone, obviously, we can look for that sell. Hey, it may also come in the form of a failure. Up, buyers try and fail. Now that failure runs the risk of selling into this trend line, right? So keep an eye on that tomorrow, right? We don't want to sell into that trend line, but those are the two areas I'm looking to be a seller here for, or the two situations I've been looking for a sell here up inside that battle zone. Now, with that said, what if price collapses? Well, we come back in tomorrow morning, open the trade room up at 8 o'clock Eastern time, and we're way down here, right? Price collapses. This is where it's important that you know where the objective is. The bears have control. The objective is down at that low. So if we find ourselves down at that low, now what do? We're too low to sell. How do I sell high? Yeah, get that moving average coming down, up, failure, right? Buyer failure above. Usually when we come off a low like this, a pullback usually isn't going to be the most reliable thing in the world because you're going to have traders fading that move off the low, profit taking off the low. Usually when you come off that low like that, it'll usually do, right, again, either a break up and a failure, right, or a two-legged pullback, right, two-legged move, right, for a trap high from there. Try to use this trend line if at all possible too, right? If we can get, we may be too low to do that, right? But try to use that trend line, right, to sell high as well. The objective for the sellers right now, back down to retest that low. And then, of course, we can't forget about the larger measured move, right, that we see waiting down at 47.12 as well. Now, with that said, let's not forget about the bulls, right? This market could turn bullish tomorrow. What would it take here? Well, in my opinion, we want to get above that trend line, first of all, and then hold a pullback. That'd be the key here for this turning into a bull market tomorrow. And of course, we assume they're going to try to go retest, right, that prior week low. And then, of course, the big round number back there at 49. Yep, 49 will be the next milestone overhead. We'll know more about that tomorrow if and when we turn bullish, because as of right now, we're still coming off that big drop, right? So that would be all the way up there. What's that, 49.30? Right, that's kind of the next milestone from there. So we'll have to figure that out tomorrow once we know more information. But again, wait for it to turn bullish before you try buying this chart, before you try buying this market tomorrow. Sell high, don't sell low. And remember those three questions, right? Who has control? Where's the objective? What was the last one? Where are we right now, right? If you don't know those three questions, you don't be touching them buttons. Let's keep going. How about some S&P? S&P's bullish and trading at the low of a spike in channel as it tries to retest the measured move it already reached earlier today. The bulls are in a great position with the two-legged pullback off the highs. All the buyers need right now is the proper signal. If price pushes lower, the next step is to look for seller failures at the moving average and continue looking for a retest of the highs tomorrow until the sellers, right, can possibly take control. Now, looking like a page out of the gold playbook, right? The S&P here finishing off a V bottom. Big move down, big move up. I told you this market loves to follow crude oil, right? If you listened to me last night on the newsletter, you were ready. Boy, the S&P was about 5 minutes after crude went lower. So if you listened to my newsletter last night, if you watched that crude tumble off that 10:30 news, I hope your broker's calling you saying, what are you doing different over there? Keep it up, right? Hope you guys are having a great week out there so far. Don't forget, if you're watching this video right now on our YouTube channel, it's only a small snippet on the YouTube channel. In the description of that YouTube video, there's a link in there. Follow that link. Join me on the blog for the full-length version. Join me on the website here at schooloftrade.com. And while you're here, don't forget to join that free trial. You'll learn all about the who, what, where, when, and why. You'll find out why we're known as being the industry leader in trading education. And while you're here, don't forget, learn more about our beginner, intermediate, and advanced levels of membership. There is no reason why, if you want to be successful, you won't find a way to get started with me as a beginner, intermediate, or advanced course. I've helped thousands of traders do this in my lengthy teaching and trading career. And don't forget, I'm here to answer all your questions every step of the way. Things don't get better without changing the way you do things, guys. If you want to be a great trader, come get started. Learn the correct way to do this. If you really want to change your life with day trading, I will give you those tools. All you have to do is go out and grab them and come join me every day in the trade room. Guys and gals, I've taken up too much of your time. Thanks for being here. My name is Joseph. Same time, same place. You got it. Adios, amigos. Bye-bye for now.